Hello, everyone, and welcome to ChartPros Introduction to the Volatility Index webinar. I see a lot of people joining, and we had close to 100 people register for this, and so I'm very excited. There's a lot of familiar names that I recognized, and then there's just as equally a number, probably a greater number of names that I've never seen before, and so welcome to everyone, new and old. And so what I like to do when I go through these is I like to present as if it's the first time that you've ever heard me or met me. And so those of you who know me or have heard me present before, some of it may be a repeat, but that's okay. It's better the second time around, so I'm told. And so anyways, before we get started, we've got the customary risk disclaimer. You don't have to read all the fine print. You just have to know that trading is risky. Of course it is, and we all know that. And if you didn't know that, just ask all the people that were short over the weekend. People were sending me messages. They were guessing and anticipating that the market was going to go down and tank, and of course they guessed wrong. So that's the way it is. And so it is risky, and sometimes you guess right and sometimes you don't, but I try not to guess myself. So I was actually on the sidelines myself. So again, trading is risky, and we've got that out of the way. And so before we get into the heart of the matter of our content tonight, I always like to give a little bit of background about ChartPros and about myself. And so what we like to tell people we do is we simplify the complexities of trading, and we help beginners, intermediate, and advanced traders in a variety of areas. Again, my name's Tom Winterstein. I'm the founder of ChartPros. I kind of accidentally got into this company. It's one of 4 companies that I own all or parts of. I don't do it full time, but I'm inspired fully to help others and to pay it forward, and that's really the reason that I got started into it. One of the other lead traders in ChartPros with me is Michael Perigo. Many of you may remember Michael from BTG and Market Markup, and if you know Mike, you know Mike. He is by far, one of the best traders, and even more so the best teachers I've ever run across. So with Michael and with Sean Jantz and Ryan Smith over at BTG, which is where I got my start, with futures and Forex and Nadex and all that stuff. But I've been trading for over 20 years. Probably just in the last 5 years, more so with futures and Forex and commodities. Before that, it was equities and equity options. One of the things along the way is I became a certified mental performance coach that helps me in a lot of my different businesses. And as my wife and I have been married for 30 years, and we have five adult grown men, boys. Our youngest just left the house to go to college. He's 18. And so talk about, being a mental performance coach to 5 athletes in the house was super helpful for them growing up, but it's helped me in my professional endeavors as well, too. Some of you have recognized some of the names in here that have worked with me individually as well, too. And it really does take a different approach from a mental standpoint. If you've worked with Mike before, you've probably heard him say charting is the easy part. It's executing the trades and risk management that becomes the harder parts. And so that's a little bit of background about myself and about the company. The website and the social media is there. I think a lot of you follow us on social media. If you don't, we'd certainly appreciate a follow. And so as we get into it, what we're going to look at tonight is we're going to talk about the VIX, the Volatility Index. And for the longest time, I had heard of the VIX, but I didn't really know what it was. But I was kind of too afraid to speak up and say, hey, I don't know what this means. And so some of it, I learned, through Mike and Sean. Some of it I learned on my own. You like to think that you can learn on the internet or CNBC or all these sites or Google and Investopedia. and that's good, but you really don't understand what the VIX is until you start trading. Okay, so we're going to see, why is it important to us? We're going to look at historical relevance and some examples at a macro level, a micro level, and how to use it, how I use it, and potentially how you can use it. We'll look at the VIX relationship to markets in respect to indices and options, and we'll finish up with some Q&A. So that's what we have in store for you tonight. And one of the philosophies that I like to share, with people, again, if you've seen me present before, you've seen this slide, but ChartPros, we are not a signal service. We're not going to tell you what to trade, when to trade. We're not going to tell you when to buy, when to sell. That's just not what we do. It's not a live chat room where like, hey, let's pile into this. What we prefer to do is we want to teach people how to trade for themselves. And most importantly, because people have different trading styles and they adapt to their trading styles because they have different risk tolerances. Just like we all have different personalities, we have different ways that we trade. We have different size accounts. We have different appetites for risk. It's just so much difference that I don't think, from my perspective, that it could be just the uniform way that, hey, we all need to trade this. We need to trade it now. And we need to get out of this and do this and do that. And I've been part of those communities, earlier in my trading career, to the point where, sure, it works sometimes, but what I learned was that wasn't the best way for me. It doesn't mean that wasn't the best way for others. But what we want to do is we want to teach a trader, how to fish, so to speak, so that they can, eat for a lifetime. We don't want to just cook up the meal and serve it to you on a platter. We want to teach you how to do it. So with that said, what is the VIX and why should we care? Okay. So essentially what it is, it's derived from the price inputs of the S&P 500. You may have heard it by other names like the fear gauge or the fear index. And it's a measurement of fear. And this is not intended to be, a mathematical discussion, but it goes into all types of derivatives and standard deviations and calculations to get to it. But a couple of things you need to know about the VIX, when not from a math perspective. One, it is a measurement of fear in the marketplace. Secondly, it more times than not will move inversely to the indices and can often be an indicator of upcoming market moves. And, people will ask me, so does the VIX lead the indices or do the indices lead the VIX? And the answer is yes, because what you'll notice over time is they kind of take turns leading each other. And it's not too difficult to tell when one is in the lead and one is charging ahead and the other one's following it. What is more difficult to tell sometimes is when you can't determine which one is in the lead and maybe they're trading a little bit sideways. In the VIX, the symbol is /VX is the one that we look at. And there's different derivatives of it, and there's ETFs and different ways to trade it and stuff like that. But traders look to the VIX as a way to measure market risk, fear, and stress before they make trade decisions. We've probably, if you've never heard of the VIX before this week, you've probably certainly heard of it this week, just with all the volatility that's been in the marketplace. And certainly in 2020, you for sure, if you've been trading in 2020, have heard of the VIX before. And so what I like to do is show the big picture, the macro level, of the VIX. If we take a look over the last 10 or 12 years, 15 years or whatever, this is a chart of the VIX, and you see two enormous spikes in there. One was around 2008, what we know as the financial crisis, and then quite recently in 2020 with the pandemic. And so the decade in between, what you had was a steady decline with a trend down, a lot of sideways movement. If you didn't trade back through 2008, you probably weren't that familiar with the VIX trading above 20. And when the VIX trades below 20, nobody pays it any attention because it doesn't have that much of an impact, on the market. So the only time that you really hear about the VIX is when it's spiking up or down, because it can have a knee-jerk reaction to the indices and to the price of equity options, as far as that. So the last 10 years, since around 2010, with just a slow, gradual decline, of the VIX, it made for some really good trading because you just didn't have that much volatility. It was kind of boring trading, but good trading nonetheless, in the form of things like your 401k or retirement. Because what happened to price over the last decade is it gradually increased. Okay. And so you see in the box on the left-hand side is the price movement and price action of the 2008, 2009 financial crisis, and in the time period that it went through there. And that at that point was the highest peak that the VIX had ever reached. Okay. And so then with the VIX kind of just a slow decline and not a whole lot of spikes, and sure, you would have some spikes around things like natural disasters, presidential elections, midterm elections, you know, any black swan type events. The VIX is going to start roaring its head, kind of like it did in 2020. And then you have this massive price movement, in the spring of 2020, and that's when the VIX had spiked, back here, flip back to here, and we see, during the pandemic, just an absolute, missile launch, from where that went. And it's still not back into the comfortable range. You kind of see that rectangle down at the bottom with a level right around 20. When the VIX is trading below 20, things are just kind of copacetic. There's not a whole lot of, the S&P went up 100 points today or went down 100 points. You're just not getting a lot of that stuff. If it went up 30 points, that was a big day, when the VIX is below 20. Kind of an average or typical range, and there's a lot of different, things published on the web about the volatility indexes. And you'll see anywhere between 18 and 35. So we're kind of in that normal range right now, but we're still, we're still subject to, quick spikes on the lower time frames, because what I'm showing you here is a weekly view over the last decade and a half or so. And so, you can actually chart the VIX. I personally don't trade it. Some people do trade it or trade derivatives of it, but I use it in my trading as a tool for confirmation. And as we drill down to some of the lower time frames, I'm going to show you exactly what I mean by that. And so we just took a look at that. And so here's a recent trade plan that I had going into this weekend, and particularly after the markets opened up Sunday night. And once it kind of broke some of the bearish resistance and support resistance. Now you notice all I have on here, I only have 2 trend lines. That's it. I don't have any levels. I don't have any indicators. I don't have any fibs. I don't have any supply zones, any of that kind of stuff. And I had it on there to kind of reinforce, but for our discussion purposes today, and I posted this, some of you may have seen this on our social media, but I posted this just because of its simplicity, because people, they tend to overcomplicate it. And when it comes down to it, this is what it comes down to. I don't know if that's going to work or not. Time, is going to tell. But right now, and you've heard me say before, maybe you've heard Mike say it before, charting and trading is essentially an educated guess. Okay. And so what we want to make sure is we have the best education when it comes to charting and trading. And experience is a great teacher too. So if you see how this played out, it kind of thread the needle there. It did breach the top trend, line. But from a weekly perspective, it's held so far. Okay. And so what does this have to do with the VIX? Okay. Well, I'm going to, the next slide, what we're going to take a look at is, what was the price action of the VIX as this was happening? Okay. And people are going to say, well, price went up because of the election, or price went up because, the vaccine to COVID. Is like, I don't really care what the impetus was. All I know is that price moved. And as traders, I think you would agree that's what we want, is we want movement, so that we can apply the technical analysis principles and the other things that we know about trading, so that we can, take advantage of that. And so if you look and see what the VIX was doing at that time, again, just very, very, simple, basic structure here, a couple of support and resistance levels and one trend line. Now, you notice one thing about the VIX, it's kind of gappy, okay? Most of the gaps have been filled. There's some a little bit lower than here, not on this screenshot, that haven't been filled. But this is on a 4-hour, okay? And it directly correlates to when price went up here, breached the the needle up there, so to speak. And you see right here on the 9th, what's in the morning, the VIX tanked all the way down here and then absolutely skyrocketed up, okay? And that's when the indices turned, okay? So, we've looked at a macro level over the last decade, and we see the spikes, in the VIX, and we see the different price action. And then, just taking it from a weekly standpoint, and the reason I'm showing all these different things is, regardless of your style, whether you're a swing trader that makes a couple of trades a year, whether you're a swing trader that makes a couple of trades a month or a week, or maybe you're a day trader and you're making a couple of trades before lunchtime, you'll find that the VIX can be your friend, and an aid to us, more times than not. It's not always going to be helpful, but more times than not, it actually is. And so as we continue to look at the impetus and the reason for this and how we can use it, say, well, you might say, well, gee, Tom, I wasn't trading Sunday night or Monday morning. I was on my way to work. I was in a meeting. I don't have time to trade the 4 hours. Sometimes I can only trade the opens. I can only trade the close. Okay, I get that. So we've got a way for you to use the VIX as well too. And so here's an example from today. In fact, I took that chart that I had of the VIX, and I reduced my higher time frames all the way down to a 5-minute chart, and I'll track it during regular trading hours. I will track the VIX on a 5-minute chart, because I feel that it gives me the feel for the direction. Now, my higher time frame bias is already there. I've got an idea, but we all know that price action doesn't go straight up or straight down. So here's an example this is on the ES from this afternoon. You see on the left-hand side, right as structure could have potentially the VIX popping. You don't know that it will, but you know that it could. It's got another fib below there and a trend line. But if it happened to pop there, and you look over to the ES, well, the ES was at a point where it was approaching a 78.6 fib retracement, and say, well, it could fall from there just like the VIX could pop, and it did, okay? So it went from 35.46 down to 35.30. That's a 16-point scalp. And even if you didn't get all that, let's say you got a half of it or a third of it, that's still 5 to 8 points where you've used the VIX as confirmation, another tool, just like we use basic structure, we use Fibonacci, we use advanced Fibonacci. Here's another tool to use from the VIX standpoint, as it's approaching structure. Now, if it wasn't approaching anywhere where the VIX could have looked like it had turned, I may have stayed away from it. And I actually took this trade in here too, and I scalped about 10 points off of that. I didn't catch it all. That's okay. But I like to put the odds in my favor and use the mathematics to my favor, from a trading perspective. And in this case, it worked out. Sometimes it doesn't, but in this case, it did. So you say, well, gee, I don't trade the ES. I like to trade NQ. I hear you. I got you. And so here's one on the NQ. This was during the open today. I traded this one as well too. Now, I don't post these in our subscriber room because I think it's a little too intimate from a style perspective. A lot of people won't even look at a 5-minute chart, but I do. This is my style. And so one of the things that I did as I looked at the VIX, and I had a little trend line here. Now, the fib that's on the left-hand side, it had pulled it up, and I was already using that after I was in the trade. But the fib structure was there in support. It could have supported a pop in its opening volume, And just like on the right-hand side, NQ was approaching, the golden ratio of 61.8, where it could have turned around and dropped. Well, fortunately for me, it did. I had a simultaneous drop in NQ and a pop in the VIX. And if you look at that, that's 11,749. That's over 100-point drop. Now, did I get all 100 points of that? No. Am I happy with the portion I did get? Absolutely. And I use the VIX, on a 5-minute time frame to help me line that up. Now, you can do that from an hourly. You can do that from 4-hour. We've already seen you can do it on a weekly with just basic structure. And we looked at the VIX, for the last decade. So it helps, I believe, across multiple time frames. It helps across multiple styles. It helps across the different indices. It's not just for ES. It's not just for NQ. It can help in any sort of way. So one of the things that I thought I would share with everyone, and we posted this, in our subscriber room. And I should have mentioned too, we have traders on the call today from our price action mastery course. We have traders from our chart subscription room. We have traders from BTG. I know we have traders that signed up from our postings on social media that, maybe they've never been, a client of ChartPros before. So we do have a mix of traders in here today. And again, that's one of the reasons I want to show all the different styles. And for those who may be listening to this on the recording later on, and we will make a recording available, again, so we try to make it as generic as possible so that you can adapt what you like, throw out what you don't like, and then that's your style. And again, so we want to teach you how to do it. We don't want to do it for you. Okay, so that's a pretty big chunk, if you will. That's boiling down a very complex instrument, the volatility index, to how it works across the indices. There's another major way or an impact that it has in the market that I want to share with everybody. Well, this is a setup. Excuse me, before I move on, I was setting up the next slide. This is a setup. If this structure holds, this is an hourly chart. We posted this in our chart room earlier today. We have a high degree of interest if the VIX can reach up to that gray box, structure up there, to see where the indices may be in relationship to its structure. So we wanted to share this with everybody. Again, this recording will be out there. We can make the handouts available. If you want to take a screenshot, go ahead, or a picture of it with your phone. Just know that that's an area of interest, and it's shorter term because it's an hourly. It's not something that we're going to make major decisions with our 401k, longer term investments. But from a shorter term day trade or a shorter term swing trade, that's a level of interest that we've got our eyes on. So as I was starting to say, the VIX can have an impact on the indices, but it can also have an impact on option prices. And so whether you're planning to purchase puts or calls, or you're doing some derivative of it, or you're getting a iron condor, or whatever happens to be, just know that the impact of the move of the underlying instrument on your option price can be significantly impacted by the VIX. And oftentimes it seems like the option price will have a life of its own compared to the underlying instrument itself. And really what that comes from is because of the volatility that's associated with that, and the volatility in the marketplace. And so as we look at that a little bit deeper, how does the VIX affect option prices? Well, unlike interest rates, which don't affect, option prices for the most part, the volatility significantly affects and has an impact on the option price. The higher the volatility of the underlying asset, the higher the prices for both the call and the put options. And this happens because the higher volatility increases both the up and down potential. So it's actually possible that, let's say you bought some calls and your underlying equity option, or your equity goes up, the value of your option could actually go down. And that's because of volatility. Or if you heard of implied volatility, or the IV crush, the implied volatility, just deflated. And so that can have a significant impact. And again, I didn't want to make this a math discussion, but I did want to share a resource that I pulled from Investopedia. There's similar types of resources and charts, but I thought I would share this. And this will give you, on the left-hand column, if your position is one of those. And again, I know that there's all kinds of different crazy combinations that you can have with strangles and straddles and verticals and all this, that, and the other. But just from its most simplest and basic structure standpoint, if your position is that on the left, then a rise in the S&P and a fall in implied volatility will give you that sort of impact on your option price. And again, not to have a mathematic discussion and not getting into the Greeks and the thetas. And of course, I know that your timed expiration also has an impact and all that. But just from the volatility standpoint, this is what the implications can be based on your position, and then based on what's happening, in the marketplace as well. I'm going to pause for just a moment, see if there's any questions before we move ahead. I have reserved a large amount of time for question and answers in this as well too. I think everybody's probably muted. So if you have a question, you can raise your hand. Adam Law is helping me moderate, so make sure that we see all the questions that people raise their hands. I don't need 30 people to all unmute at the same time though. So someone sent a private message question and said, how can the VIX, can you incorporate that into your retirement planning? And of course you can. And I would suggest and advise taking a look at the macro level, just like we started and we looked at the last decade when, so we can, plan and forecast, what the VIX may or may not be doing, just like we can with the futures from a long term. And so, I often, the way I describe it, and one of my sons is doing this too, is essentially we'll swing trade the retirement accounts, and we'll do it based on the chart of whatever that fund happens to be, but also taking a look at the VIX. So the VIX does come into play, when it comes into longer term, retirement. So yeah, thank you for that question. What is the relationship between the VIX and the Volatility 75 index? Are they the same? I am not personally familiar with the Volatility 75 index. I don't know if it's like an ETF or if it's a fund that you can invest in. But the VIX, the /VX, is the futures version of the volatility index that you can actually trade. Like I said, I haven't before, and it is investable. And there's a lot of different derivatives of that. I suspect the Volatility 75 index, may be some derivative of that, Lucas. All right, good questions so far. I'm going to keep moving through here. I wanted to let everybody know that, and I talked with Mike Perigo. I know many of you know Mike. He recently did an advanced futures course, and one of the modules in there was on the VIX itself. And I told Mike, I said, I think the VIX could just be a standalone course. It really could. And so, long story short, I got him to agree to one, peel it off as a standalone, but two, offer it for next to nothing. The retail price on that would be $129. And I got him to agree to offer it for only $29 for a very short time. And his definition of a very short time was the remainder of this week. So I'm trying to see if I can get it the remainder of the month. So anyways, I wanted to put that out there, let everybody know. If you are in the price action mastery certification course, the other thing that I got Mike to agree to is to make the VIX module part of the course now. So it's in there. You can go in there, and it's at the very end. It's actually after the final exam, so it's like bonus material. And so I was very happy that Mike was, he was very willing and eager to make it part of that course. If you think about it deep down, Mike's a teacher, and Mike's a great teacher. He's one of the best teachers I've had when it comes to this. And so again, just trying to pay it forward, so to speak. Those of you who know me have heard me say this before, is, I don't do ChartPros, for the money, but I won't do it for free either. I'm all about helping people, but I think that there needs to be an exchange of value there as well too. So in that light, what I wanted to do is make sure that everybody is aware of just the enormous number of free resources that we have out on our website. And a lot of this has been derivatives of the courses that we've already done. In my day job, I run a software company that specializes in online training. So it's a natural extension for me to offer online training through ChartPros. And one of the things that it really lends itself to is you can reuse these learning objects over and over again, or you can extract a portion of them and offer them as separate courses. And so we've done that. From a free standpoint, there's the introduction to price action trading. That's free. That's on our website. The introduction to trading psychology and mindset is another free resource. For those of you that trade Nadex, I wrote, it's more of an article. I call it an ebook, How to Become the Casino Trading Nadex. And it was originally my trade plan for Nadex. I didn't trade back then. I didn't trade traditional futures like I do now. I didn't trade, spot Forex like I do now. And so that was how I, cut my teeth, so to speak, in trading Nadex. There's a 7-day free trial to the monthly chart subscription. Mike and I, we put out charts every day. Mike puts out 2 grids, about 14 different charts of the indices, commodities, and Forex. And then there's some coupon codes for those who may be interested in our price action mastery certification course. If you'd like to save $200 on that, you can use the code ChartPros200. Mike's new advanced futures course, we just released it about 30 days ago. You can save $100 by using the code futures100 on that. And there's also a trading psychology and mindset boot camp that we just launched in the late summer. And we do a lot of individual coaching and mentoring. And again, because, we're not a signal service, we have an expanding and growing community. I'm highly motivated, inspired to pay it forward. And so that's kind of what we're out there doing. And again, I'm going to stop and pause and kind of open it up for questions, not, even if about anything we've talked about, whether it's about the VIX, whether it's about any of the charts, whether it's about any of the free services, that we offer. And really the rest of the time for this evening is for you. I've gone through all the prepared materials that I have. And so here's your chance and opportunity. If we want to have an open dialogue, we can do that. And if you guys are ready to be done, we can be done too. So it's whatever you want to do.
Hey Tom, this is Vijay here.
Hey, good evening, VJ.
Good evening. It is a great session. Thank you so much. I do have one quick question on the VIX. Does the VIX You can use VIX for all the four indices, the Russell, the Dow, and Nasdaq and S&P.
Yeah, for the most part. Yeah, and like you saw my grid, I had them side by side. And interestingly enough, though, it's interesting that you bring that up because this week there was some what I call indice divergence, meaning the ES and the Russell was limit up Monday morning, I think, and the Nasdaq was down. Okay, and there was some underlying and fundamental reasons that happened, but the VIX didn't help us there with the Nasdaq, and essentially with the news that came out about the vaccine, any of the stay-at-home type things like Zoom stock price, Netflix, any of those that benefited because of all the stay-at-home, had a negative correlation because the market's perception was there'll be less people staying at home, so less need for Zoom, less need for Netflix. And then conversely, things like, the airlines were going up because, if we can get this pandemic behind us and get back to a new normal, so to speak, then, all the stocks and companies that got beat up, this year can hopefully get some reprieve. And so, yeah, again, the VIX is just another tool, just like support and resistance, and I think, I know Avante's still on, but Avante had posted in the advanced futures channel how he had used the VIX to take an overnight trade on the ES. I think it was this week, and and just he's stated kind of like I do is I'm just amazed at how the math works. So again, don't use that as your sole decision making criteria, but you should certainly incorporate it into your decision making criteria.
Yeah, absolutely. Thank you. Yeah, Wanta's chart looks like it was a picture perfect chart when it comes to the entry point and where the VIX landed and where his entry was. And I think, uh, you know, I had some impact on the Nasdaq, and that's the reason I had some question because it did the opposite of what the VIX had, maybe because of the vaccine news and everything else that's going on.
Yeah, I think so. I think so. And then, yeah, because Vontae's chart was so good, I could have used it in the presentation tonight.
Absolutely. Thank you, Tom.
You're welcome. I've got about 42 past the hour. I've got some time. I'm in no hurry. I can sit here another 5 minutes or another 20 minutes. If you have questions, I'll stay. If you don't, then we can leave.
Hey Tom,
Yes.
can you this is Lucas here. Can you break down more about the relationship between VIX and the
Having a little bit of hard time hearing you. Can you get closer to the mic or speak up?
yeah, I want to know how the if the derivatives of VIX move the same as the VIX.
Yeah, I'm not really understanding. It's a little choppy. Maybe you can put your question into the chat. While he's doing that, that VIX module is part of the advanced futures course, the new one that just came out about 30 days ago. I wanted to make sure that I had mentioned that if I didn't. And also, there's a private Slack channel for people that take the advanced futures course. And really, who that's for is if you've been through the Forex Mastery course or you've been through the Price Action Mastery certification course, then the advanced futures course, if you thought that the high to high and low to low fibs were good, well, you ain't seen nothing yet. And I thought I had taken everything that Mike had taught before, but I didn't. But it's got some of the um, he'll teach you how to identify the institutional algorithms, either from a bull or a bear perspective, and in certain fib sequences when you see them, that's just killer for the trading. Again, just another tool. Um, I'm looking for that question in chat if it came in. Did anyone else understand the question? Because I couldn't hear it. It was really choppy for me. Just want to know if the VIX and its derivatives moves the same are these derivatives moves 24/7. There's nothing that moves 100%, lock, step, and barrel. Just like, your 401k mutual fund may not move exactly the way that the futures do. There may be some latency, there may be some lag, and there may, it kind of depends what the correlation is. And a lot of the times these indexes and derivatives will have a correlation, and a one-to-one correlation will be as close as possible. But sometimes, to have an inverse, or maybe it has a 0.25 correlation where it's close but not exact, like that. So you'll have to look at the particulars of whatever derivative it is that you're looking at. And there's a bunch of them out there. There really are, and I'm not here to recommend, funds or derivatives or any of that stuff, because there's so many good ones. But just, that risk disclaimer, just remember that it's all risky, right? Oh, you're welcome.
Hey, Tom, how's it going, man?
Hey, what's up?
Hey, I had a quick question. So I know when it's under 20, um, the volatility is usually a little low. When it's under 20, is it worth charting the VIX?
It is on an intraday. I think if you're trying to scalp trades, like if you saw like the 5-minute chart I showed from earlier today, we didn't have a whole lot of, overall movement in the ES, and finished, essentially unchanged, maybe up a little bit. But it traveled a lot. Okay. And so there was a lot of good scalping opportunities. So yeah, even when it's down below 20, it's always good to be aware of where the VIX is. It's kind of like, kind of like that kid in your neighborhood when you're growing up that no one played with, but you always knew where he was.
Yeah.
The VIX can be your friend and it can be your foe. So try to keep it your friend by knowing, what it's doing.
Yeah, because honestly, it's been one of the best tools for me because and sometimes I still have to remind myself that it's not a signal, it's just another tool that you can use.
Right.
Because I've gotten in a rut before where it's like um, um I've automatically, whenever I try to do a trade, just look at the VIX first. But as you said before, sometimes, the indices is what's leading, not the VIX. So
Right. Sometimes it's hard to tell which one's leading. And when they're just kind of chopping and going sideways, it is like there is no leader. And then other times it's interesting, particularly when I'm looking at the VIX on an intraday, because again, during regular trading hours, I'll follow it on a 5-minute. If I'm trading after hours, I'll put it on 30 minutes just because it doesn't move that much. But it's kind of sneaky, it will move. And sometimes like the little voice inside me said, wait, the VIX is going up. It's like, but it shouldn't be going up there. And then sometimes the VIX goes up so it can go down. You know what I'm saying? I don't know if you've seen that on the lower time frame. Sometimes it'll do something like you're not anticipating. Well, gee, it shouldn't be going up, and then all of a sudden it just tanks. Oh, and then it goes, in the direction I had anticipated. It's like, oh, and it's funny because I've said that, numerous. Oh, it's got to go up so it can go down, and sure enough, that's what happens.
Yeah, it really is scary how it goes. But I've been in a rut too where it's like I expect it to go a certain way, but as we've seen throughout these last couple of weeks, expecting something isn't really necessarily what you want to do.
Yeah.
So
I've learned by working with Mike to take the word expect out of my trading vocabulary. It's okay to anticipate, but it's never okay to expect, anything from the market. And again, for those who may not have, or maybe newer traders and have traded this year in 2020, but didn't trade through the financial crisis or didn't trade through the .com, heyday. It seems like 2020 has been all of that rolled into one, so to speak. And, I was in grad school back in the late 80s when the S&P went down 22.3% in a single day.
Wow, that's crazy.
Yeah, and the people out there saying, did he just say 22.3% in a single day? Yeah. So think if the S&P were to go down 700 points tomorrow, because that was the equivalent from a percentage or something like that. So if the S&P, so if it goes up or down 100, everyone goes woohoo, but think about that, what, and I don't even know if that can happen anymore with all the safeguards with limit up, limit down. If it goes, I think 7% either direction, it shuts down for an hour. So, and that's a good thing, because I really do think back in March, with all the limit downs that we had, I really thought we were going lower, but I think that all those trigger points and safety features that have been put into the marketplace probably saved us another 5,000 points, I think, on the Dow.
Yeah, absolutely.
I thought we were going to go below 15,000. We could have structurally, but we just didn't. And that just kind of gives everybody enough time to ease some of the panic, let the government and businesses do what they're going to do, and just kind of slowed everything down, which was good.
Yeah, so I just know in the coming weeks, it's just going to be really interesting to see what happens. It's going to be a lot of fun to trade these charts.
Yeah. Well, if you notice, the VIX is still above 20. I don't think we're out of the woods. I'm hopeful that we don't get, another pandemic-like swing, but we could. I've in the marketplace, I've come to realize that anything can happen. There's not a whole lot that surprises me anymore. I don't know if anybody on the call today was trading this, I think about 6 or 7 years ago. If you ever remember a thing called the flash crash, okay, and this was intraday, where the Dow in the matter of a few seconds went down 700 points. And if you go back, I went back and I looked at the 1 minute candle. Look at a 1 minute candle that goes down 700 points on the Dow, and it was some trading software glitch or whatever. It resolved itself fairly quickly. But think about, and I was trading back then, but I wasn't in any trades. And I was watching, like, I couldn't believe what was happening. I thought it was another 1980s, yeah, Adam Law just typed out Mark Douglas trading in the zone. Anything can happen. Absolutely. And although, I've seen a lot. I haven't seen everything. I don't pretend to know everything, but if you go into this stuff with an open mind, with zero expectations and just anticipation, and make, good, calculated, educated guesses with your trades and practice good risk management, then, the name of this game is being, one, confident enough to do that with the proper education, and then consistently enough with the profits, because that's why we all do this, right? And so I think we all go into trading for the money, but if you focus on making the money as opposed to the process of trading, then you kind of get your priorities a little backwards. And I know some of you I've talked to about that before, and have heard me say that. So that's, just focus on the process, and the outcomes will take care of itself.
Yeah, definitely. Thanks for your time, Tom. Appreciate it.
Oh, you bet. Thank you. So Jose asked a quick question here regarding the effectiveness, credibility of the VIX. Is it true that the Fed has a short position on the VIX to keep it low? What are your thoughts on that? I haven't heard that. I would have no way to know. I wouldn't care if they do or don't, because I just trade the charts that are in front of me. To me, I don't know. I'm not sure where you heard that. I don't know how true that could be. I guess anybody could have a short position on the VIX, including the Fed, but I don't think so. That would seem unusual to me, but again, nothing would surprise me. ChartPros runs 24/7, right? The website does. I run more like 20/7.
Tom, Vijay.
Yes.
So similar to VIX for the futures and the markets here, is there anything equivalent for the forex?
Not that I'm aware of. When it comes to that, there's certainly things that are correlated, like UCAD is correlated more to oil than the price of oil can, and the price of the Canadian dollar are correlated. I don't have it handy, but I've posted before. There's a list of about 10 things with forex where certain things in the global economy can have an impact on a certain forex pair. And if you send me an email, I'll make sure that you get that. I've posted that before in the Slack channel, but it was a long time ago. So I know I've got that. I just don't have it handy. Otherwise, I'd pull it up right now for you.
Got it. Thank you so much.
Sure.
Hey, just real quick for the last question. Usually when I use with Forex, I usually go to sites like Forex Factory,
Right.
use their calendar. And the reason why I like it is because they'll tell you based on the news how big the swing or how big it'll move the market. You know, whether I think it's like orange or red or green. It just gives different indicators on how the importance of the news.
Right.
So
yeah, good point. And so if you're not familiar with that, it's forexfactory.com. And like Vante said, is they publish a calendar of news events essentially every day, and you can look pretty far into the future. And then they'll have it color coded, kind of like a red, yellow, orange. I don't know where they got the orange from, but I always make sure if there's any red news events that's having an impact on something that I trade, I make sure that I know that. So forexfactory.com is something I check every morning. It's one of the first things I do, even before as toss is loading up, thinkorswim is loading up, I'll check forexfactory.com. So good point. Thanks, Monty.
Yeah, no problem.
And yes, I do use that, and I think it's quite useful, especially evening when the foreign market opens up, and I try to see when I can stay away, especially during the news events, especially during the government briefings and the bank briefings and things like that. So that's
Exactly.
awesome.
Well, good. This has been a great session. For me, I appreciate everyone being here. I took time out of their schedule to participate with me today. And for those who may be listening sometime in the future on the recording, I appreciate if you've made it this far. You did a good job, and you have access to all those discounts on the screen. So, and free courses and free resources. So do make sure that you're taking advantage of that. Jose, thank you as well. I appreciate it. And that it's really the people that I get to work with are the ones that inspire me. A lot of the ideas for ChartPros have come from people just like yourself. and say, hey, you know what? You should really try to do this. I'm like, well, why? And then they'll convince me to do it. So I do it. So again, thank you to everybody, and the recording will make that available to you. And thanks again. Have a good evening.
Thank you. Have a good one.